Well, it's been a busy few weeks for the housing market, and the backdrop is constantly changing. Sir Keir Starmer announced his resignation, and it looks as though we'll have a new Prime Minister in a matter of months, if not weeks. Andy Burnham is the frontrunner to be the UK next leader, but what this will mean for the housing market is as yet to be seen. We will, of course, report back when we know a little bit more. Meanwhile, the Bank of England has held rates alongside promising signs that the US-Iran tensions may ease. Together, that's beginning to tentatively improve the economic outlook and could start to pave the way for lower mortgage rates over the coming months. But the market isn't just responding to the economic backdrop, policy is shifting too. The government have just announced a fresh wave of home buying and selling reforms designed to improve transaction speeds and certainty. Meanwhile, the Renters' Rights Act is now in force, and we're already starting to see the first signs of how it's bedding in. That aside, this quarter's Hamptons Market Insight report looks at how the market has responded so far. In sales, the market across much of London and the south isn't in downturn, but it is demanding patience and realistic pricing. Higher mortgage rates have dampened demand, stock levels remain high, and transactions are taking longer to come together. But there are still pockets of resilience, including early signs of demand returning in prime central London, where first-time buyers remain active in more affordable markets too. In lettings, the early impact of the Renters' Rights Act is more nuanced than many expected. We haven't seen a wave of landlord exits. Instead, it seems that larger investors are selectively re-entering the market, often buying from smaller landlords. Meanwhile, fewer tenants are seeing rents rise as the market shifts to annual rent reviews. But evidence from Scotland suggests that it's likely mean fewer but larger increases over time. And finally, at the top end, falling prices are already reshaping the potential impact of the proposed mansion tax, which will apply to homes valued at 2 million or more. Our latest analysis shows that there are 8,800 fewer homes above that threshold in England than there were before it was first flagged in the budget. However, that picture is likely to change over time as values recover. So across both sales and lettings, this is a market in transition, adjusting to a new mix of economic conditions, policy shifts, and changing behaviour too. And this quarter's report is about unpacking what all of this means in practice.